"Give me the child until he is 7, St. Ignatius of Loyola supposedly said, "and I will give you the man." Prime Minister Shinzo Abe and his Abenomics evangelists have had the ears of domestic Japanese and global investors for exactly half that time, and the convert count is looking shaky. The sternest test of faith came with the Bank of Japan's January move to negative interest rates. The shine had undoubtedly begun to come off Abenomics 6 months earlier, and the equity market's vulnerability to a China slowdown was well entrenched in sentiment by the turn of the year. But negative interest rates were a cause for more profound spasms. Japanese investors have looked overseas. Their buying of foreign bonds hit a record high of 5.2 trillion yen in March, with net buying of long-term US securities the highest since the Treasury Department began compiling data. But the behaviour of foreign investors shows an even greater disdain for the Abe narrative. The latest Bank of America Merrill Lynch fund manager survey saw global investors' allocation of Japanese equities fall in April to hit their lowest levels since December 2012. A harsher appraisal may be building in the bond market. In April, foreign investors bought a net 3.6 trillion yen of JGBs, the highest for nearly a decade, and just 1.5 trillion yen worth of stocks. That expanded on a pattern that has been in place for several months. The numbers, say SMBC Nikko strategist Jonathan Allen, tell a truth as inconvenient as it is hidden, that the most consistent investment support of Mr. Abe is to be found on fixed income rather than equity desks. But why, he adds, should the Abenomics policies, explicitly designed to increase inflation and weaken the yen, be embraced by investors who should be hoping for precisely the opposite? The money pouring into JGBs may simply be the global flows into comparatively safe assets. They could, however, represent a big and growing bet against Abenomics.
Sell in May and go away is one of the most overused cliches in markets commentary. But like so many cliches, it does contain a kernel of truth. An investor